Hello and welcome to FinTech Insider Insights by 11FS. I'm your host, Benjamin Ensor. Today we're diving into one of the more complex areas of digital finance, stablecoin regulation. With the US Genius Act outlining the next chapter in digital asset oversight, the European Union's Markets in Crypto Assets, or MiCA, regulation providing a cohesive legal standard across member states, and amendments to the UK's Financial Services and Markets Act opening the door for stablecoins to be recognised as a form of payment, stablecoins are rapidly moving into the mainstream. Fintechs, platforms, payments companies, financial services businesses, merchants and corporations all need to be ready. Here on FinTech Insider, this week in partnership with Formance, we are helping you navigate what's coming. This is your shortcut to getting stablecoin ready. So let's get into it. And I'd like to welcome three fantastic guests. First of all, we have a FinTech Insider debut for Thierry Coopman, Partnerships and Payments Lead at Formance. Welcome to the show. Can you tell us a little bit about you and your role at Formance, please?
Yeah, thanks for having me. At Formance, we are a technology company, and we build a ledger and payments infrastructure in open source. So it helps fintechs and platforms to be able to really know where the money is across wallets, bank accounts, stablecoins, and any other what they would call real-world assets in the crypto space. And we go all the way down to accounting entries, so it's basically a ledger. Myself, I spent about 25 years in technology within the payment space, and I have discussed a lot with what the people call the blockers of the industry, the compliance, the legal, the finance. But I've been running operations enough to make sure to know what is necessary to enable products and services here.
I like to think of the bits that you call blockers as the bits that create trust. But yes. So welcome to the show. We also have a FinTech Insider debut for Kostiuk, Business Development Manager for the crypto vertical at Worldline. It'd be wonderful if you could also introduce yourself, Inna, and tell us a little bit more about Worldline and your role there.
Hi, everybody. I'm Kostiuk, and I'm growing crypto vertical within Worldline payment orchestration. And my main role actually to help merchant to fix all the payment needs in one platform. It means that merchant to us come if they need to have fast time to market, to need to optimize the payment flows for different payment providers or payment methods. Also, who would like to have a mix of digital assets and traditional rails. So they definitely use payment orchestration and, of course, to have a best cost optimization. So that's why I'm here.
Fantastic. Welcome. And I'm also delighted to welcome dear Markova, Director of Policy at Fireblocks. Welcome to the show. Can you tell our listeners a little bit more about you and your role at Fireblocks, please?
Thanks for having me. Indeed, I look after policy at Fireblocks. Fireblocks being the digital assets platform. We predominantly provide custodial technology, treasury management to anywhere between crypto natives to corporates and increasingly traditional finance and payments institutions. And my role is to represent the company in front of policymakers and governments globally, and work with our teams to understand the impact of policy change on our product and our clients. So as you can imagine, I say stablecoin once every 5 minutes for the past year.
Perfect. That's just who we need for this. Well, welcome to all three of you. So let's get started. The stablecoin market has grown tremendously over the past few years, unsurprisingly for sort of a new thing, and now sits at about $300 billion, which is a sharp increase just in the past year or two. Growth is being driven by a whole range of things, including sort of institutional adoption, payment providers embedding stablecoin rails, and so on. And what we'd love to do is explore a little bit about what does this growth mean and how does regulation enable it. So let's start with that adoption. What's currently sort of driving that adoption? Where are we seeing adoption coming from? Thierry, maybe I can start with you. What do you think is driving stablecoin adoption? Where are you seeing adoption coming from?
I think adoption comes from technology. So technology has enabled a lot of new things within the financial industry. And these technologies have been problems looking for a solution. And I think with stablecoins, part of it is that it is a solution to a industry problem. And that's why a lot of people are active in it and are trying to put in what is necessary to get the benefits out of it. So it comes with a lot of promise, and the adoption rate will increase, and hopefully the promises will be realized.
Thank you. Inna, are you seeing either particular regions or particular use cases really driving adoption of stablecoins? Can you say that there's a sort of a pattern where we're seeing certain regions, certain types of player in the market really adopting fast?
Definitely, and how I see it or how I interpret it is where fiat doesn't work, we see the faster adoption of the stablecoin, and these markets are LATAM and African first of all, and one of the reason because they're always looking for innovation and for alternative, because a lot of population is still underbanked and they need to have a different way of processing payments. And if in Western Europe we are still asking, will be stablecoin really long-term play? Is it like infrastructure just change, or it's something which we can rely, and we rather want to wait and see? It's often Western mentality on that, and especially we want to ensure with regulations. And like in Brazil, Nigeria, and probably Argentina, it's not really questions. They just go and do it because stablecoin is really solving the problem. And probably we'll get later on the problem-solving part, correct?
Yeah. Is it as simple to say that there's a sort of correlation with inflation? And countries that have historically had high inflation or have currently got high inflation, like sort of Argentina or Zimbabwe and so on, where we're seeing some of the most interest. Is that fair?
For me, yes. Often the very high inflated countries are looking for the source of stability, which would be, for example, USD. See, is a way.
Mm-hmm. And Tia, how important has regulation been to enabling the growth or encouraging the growth of stablecoins? I mean, it seems as though the growth in stablecoins over the past few months has sort of been strongly encouraged by the passage of legislation and the clarity of regulation that comes with that. Is that true, or is it just a coincidence of timing?
I think it's true to an extent, right? So a lot of conversations we've been having with clients this year has started with the word genius in it, irrespective of whether these clients are sitting in Asia, Europe, or the US, or indeed Sub-Saharan Africa or LATAM, right? So I think the permissiveness of the new US administration towards stablecoins and towards digital assets was a global unlock. But what we're now seeing is that regulatory clarity is one of the building blocks that you need. The other one is just commercial logic, right? So when you have big remittance corridors, when you have sort of big cross-border supply chains that can be more quickly managed through a stablecoin payment, that's where the issuance is. That's where the adoption is, right? So you kind of have the combination of both regulatory permissiveness, and I should say I would make a distinction between permissiveness in the letter of the law and permissiveness in the attitude of regulators and central bankers, because the second is quite important and perhaps not so easy to quantify. But in markets where the central bank is really kind of like calling up the domestic players and saying, hey, can you start adopting this? You see a lot more a lot less risk aversion from the payments industry and the banking industry, and then in markets where the letter of the law might be permissive, but the attitude of the regulators is not.
So the United States would seem like an obvious example of a country where attitudes maybe shifted with the change of administration.
To say the least.
Have we seen other countries where we've seen a sort of a change in attitudes? Thierry, I don't know if you've seen that in some European countries or elsewhere, where there's certain countries that are maybe encouraging stablecoin more in the way Dia's suggesting.
Yeah. So the interesting part here, as Dia mentioned, the Europe has been on the forefront of digitalization, and I think since early 2000 we had e-money already in the regulation, and then we actually had what you could call a prototype of e-money in place in Europe, whereas I don't think anybody on the top of their head can state one or two e-money issuers today. They're not known. It's there. It fuels an industry, but nobody knows they're an e-money issuer. Now, MiCA actually catched up on the fact that e-money issuers become public on the public blockchain, and so this means you will have much more visibility on those, and the European law already allows this. I think Dia has more details than me, but earlier than what the US did. But the US kind of kicked the industry in the ass to get going with the products and the technology, and to start offering this in the market, because there's a real need there.
Let's talk about the Genius Act a little bit. Dia, maybe I'll come to you first. It's some people have sort of called it the world's most comprehensive stablecoin framework, and it's certainly established rules. It's given some clarity. Why have so many people been talking to you about the Genius Act? Why is the Genius Act so important?
Yeah. So I think one unpopular opinion is that the Genius Act and MiCA are not that different, or rather it's unpopular, depends on your audience. But I think from by the letter of the law, they are like 80% the same. And that's not I haven't really compared like word for it to get to the 80 number, but they're more or less the same. There are some important differences. And I'll name two. One is that Genius allows a higher percentage or all the reserves of a stablecoin to be put in earning assets, so in short-term T-bills, whereas MiCA puts that number a bit lower. And the second thing that MiCA does, which no one else in the world really has done since, is to require foreign stablecoins to establish presence in the European Union, move their reserves accordingly, get a license, right? So that makes the life of the Circles and the Tethers of the world very different in the European Union compared to other parts of the world. But the reason why the Genius Act, I think, gets all the credit and MiCA doesn't get quite as much credit at all, is this kind of attitude point that I was making earlier, right? So there are details from Genius that we don't know yet, because the primary law is now being cascaded through the agencies, and they're working through the details of how to actually put the law in practice. But it was a very big symbolic gesture from a very big economy to say that stablecoins are now a legitimate form of money and money on chain. And actually that gesture and that narrative, we don't even have in the European Union today, right? So the law is there. 17 new stablecoins have been issued under MiCA by a combination of payment service providers or banks or consortiums of banks. And yet, various central bankers in the EU, not least from Frankfurt, and across the pond from the UK, are still going on stage and saying, well, we don't trust stablecoins as much as we trust other forms of money, right? But they are regulated the same, right? We've got, so I think the reason why everybody's talking to us about Genius and very few, much fewer clients are starting their narrative with MiCA is because of that clarity, that intention that supplemented the letter of the law.
Yeah, so Dia, I follow you completely, because I've been working in the industry, and so banks have a banking license, obviously, and implicitly they are allowed to do e-money services and payment institution services. So you see banks, and especially then in certain countries like France, doing payment institution services like card acquiring and everything else. But you haven't seen in Europe a bank or a credit institution offering e-money institutions. Why would they? And now the Genius Act is out, and suddenly you have like 7 or 9 banks banding together. Let's create an e-money institution to issue a stablecoin. I'm like, wait, why? So what happened? You've been able to do this since 20 years already. So something is happening there.
What do you think, Inna?
Well, I always look at it from the perspective of the merchant, of the real market. And for now, when I talk to merchants, to businesses, they mainly see MiCA as focusing on a high-risk business, which is, I believe, it's absolutely wrong, because stablecoin and with MiCA license solving totally different problems. They're solving problems of settlement, of cheaper remittance, on cross-border payments pain point. So not really high-risk demand, but because high-risk vertical always have to be much more creative due to regulations and the rejections of Visa, MasterCard, and some other traditional rails, they are fast adopters of stablecoin. But it does not exclude that stablecoin actually is the most relevant for low-risk merchants. But I believe if stablecoin doesn't go to that category of low-risk merchants, they're not going to reach their potential, because high-risk vertical is still very limited, and they're not going to cover everything there.
Got it. So you're saying there's one of the crucial differences is in Europe, stablecoins are still sort of perceived as a sort of relatively high-risk instrument used by high-risk sectors, whereas in the United States, when you've got the president issuing his own stablecoins or his own crypto assets, rather, apologies, you have a very different sort of atmosphere, a very different notion. Dear, do we need to see President Macron issuing a cryptocurrency to sort of kickstart or Chancellor Merz?
Yeah.
What needs to happen in Europe?
Well, funny, I don't actually know if Fireblocks has like a company line on what we think about world leaders issuing stablecoins, but I'll make a personal comment in thinking that that's regulated institutions with the permissible licenses are probably best placed to issue various backed or unbacked assets. Would probably be my personal line. But look, I mean, Macron was part of this conversation up to a point, right? So a couple of years ago, when the first global stablecoin issuers started thinking of where to get their licenses from, the Élysée indeed was an active participant in that conversation. And there was a narrative in France that France, being wanting to be the digital finance, digital leader of the EU, they want to attract these kind of businesses, and they did. They did attract the main business of Circle to getting their license there, sort of the France being occupied, or the Élysée being occupied by other priorities, has actually moved the political kind of positivity of Europe towards stablecoins away from what it was. So yeah, I mean, probably the fact that he didn't issue his stablecoin, but he paid attention, was positive.
Yeah, he might be slightly politically exposed, or flagged as a pep, as they say.
Yeah, indeed. We haven't really mentioned the UK. Just in the sort of last moment, has the UK left it a bit late? I mean, the UK was a leader in an area like open finance, but the UK's sort of fallen a bit behind the rest of Europe here. Correct? Anyone disagree with me on that?
They're playing catch up, I think.
Yeah. But presumably for the market, the more closely aligned the British regulations are to MiCA, essentially the better, correct? Because it just adds more complexity if the British go down a completely different path, or are there opportunities if the British regulations diverge?
Well,
Do you have maybe-
I do think that the UK find itself quite literally between the US and the EU in policy choices, right? So there was some talk around the President Trump visit earlier in the year, and there is now a Treasury EU-US initiative being set up. Sorry, UK-US initiative being set up, including around the issue of stablecoins. So there is this. There is this sort of notion that some form of alignment could be pursued by big capital market centers around stablecoin legislation, right? And I do think that the UK is in a position to choose whether to align itself a little bit more to the West or a little bit more to the East in terms of US EU. So to your point, is it better for business that the laws are the same? Yeah, of course. But which one of the two frameworks will the UK choose to align itself to? That I think can also make a difference between it remaining in sort of like a secondary lagging position, or actually quite quickly catching up.
What I see from the business perspective, since Brexit, UK had to focus on launching their own license for all businesses like FCI. UK been quite busy, and I know that a lot of businesses had to separate their offices and to apply for double license, which actually I believe could be delayed all the processes. Maybe in terms of like forward thinking, they're choosing which laws they will join, more like Genius in the US or MiCA in Europe or something in between. But I think operationally it will take them a bit of time to catch up. But it doesn't mean that in a few years they will be pretty much in the same position.
Thank you. Okay, we will take a very quick break here. When we're back, we'll unpack what all of this means for companies' roadmaps. How can businesses anticipate these frameworks and position themselves to thrive as stablecoin regulation evolves? Welcome back. In the second half of this podcast, we're diving into what compliance and regulatory readiness really mean in a post-Genius Act world, and why it's not just about technology, but also about systems, teams, and processes. So Thierry, I'd love to start with you. How can sort of fintechs and other companies embracing stablecoins translate some of those policy requirements, things like sort of reserve transparency, custody standards, and audits, into actionable business processes? I mean, what does it mean for the sort of stablecoin issuers, and what does it mean for companies using stablecoins?
So the stablecoins, so payment stablecoins or e-money, they're all basically based on being backed by liquidity. So cash on the bank or T-bills or something that's very, very liquid, immediately available. The link between issuing the payment stablecoin as a currency and the fiat that is backing it has to be quite heartening. I think the PSD2 has a sub article that basically says you need to make the booking within 24 hours, which is actually an artifact of how financial institutions provide information to their customers, because they only provide it once every 24 hours and not in the weekends. And so that goes completely against the user expectation of being 24/7 and always available. So there's a challenge there on making sure that what you have on the bank and what you've been booking is actually corresponding correctly. You'll probably sell stablecoin because that's basically what you're doing if you're issuing it, and you might be using an acquirer for that already provides you the approval of the money, but you don't have the money yet. So should you issue it then or not? Can you issue it then? Does the authorization give you confidence enough on having the liquidity available or not. So those are operational things with a slightly technical thing to consider, because you want to address user expectation. You want to make that stablecoin available as soon as possible. That's where the on-ramp challenge comes in. And basically, if the on-ramp takes 3 days, then you haven't really solved the problem, right? So that's one thing. The second thing is so you have to be on the books, having your liquidity in line with what you've issued, and there is no how can I say? Maybe Dia has more insights on that, but I don't know how much my stablecoin issuer or my e-money issuer has on the bank. So I cannot ask his bank, because that's a relationship between the bank and its customer. So they won't share it with me. I can ask it towards the issuer, but he might tell me whatever I want to hear. So there's still a little challenge there to make that happen. And on a technological part, you need to make the bookings correctly so that everything that you're doing is auditable and can be reviewed. So it's not something that you put in the books that doesn't exist.
I think in this case, Thierry, you can trust one of two things. You can either trust the license or you can trust the proof of reserve, or in some issuers both. So if you trust the license, it means that some supervisor, let's say some supervisor and regulator would require that your stablecoin issuer has one-to-one reserves, and they would be doing the job of double checking with what's in their bank account, as you say, rather than you being the merchant or the retail, whomever the holder, right? So that's the one source of trust. And the other source of trust, which kind of predates regulatory or licensing days, has been this concept of proof of reserves, which is for stablecoin issuers to make their reserves auditable and available to whomever wants to double click on them.
Yeah, and indeed, the trusting the license means that you're trusting the auditors and all the organizations around that. And that's where I come from, where basically you need to prove operationally to these auditors that you got your ducks in a row and that you're actually doing the operations correctly.
Ina, do you think we're going to see a proliferation of sort of stablecoin issuers and more and more stablecoins? Or are these points that Thierry and Dia are just sort of discussing about all the the needs for reserve transparency and so on, going to mean that actually a lot of merchants, a lot of corporations, a lot of individuals are going to end up just trusting 2 or 3 stablecoins, or maybe even just one, that they've become familiar with, because a little bit like sort of brands, certain stablecoins will just become familiar and maybe a bit more trusted, and lots of the other potential stablecoins will sort of get edged out. What do you think?
I do believe actually there would be 2, 3, up to 5 max main dominant stablecoins, because we already see today on the market that USDC is at least 3 times has more volume than Euro stablecoins, and not mention that Turkish stablecoins even like much smaller than even Euro volumes. So I do believe there would be a few main dominant stablecoins for sure, and we're already seeing that so far the main players on the market who are going on chain are Visa, PayPal, Stripe. It's not none of them are European-based company from the headquarter perspective. Yet several players, big players like Worldline as well, they partner with Fipto recently to enable next generation payment transactions with stablecoins, but it's still quite early stage. We do have in Europe, I'm just back from the Web Summit, and I met several interesting fintechs who are offering stablecoin payments. However, they're looking to add an alternative. They're looking at to add credit cards because their merchants, their clients, still demanding all palette of payments. So none of them want to end up with one type of payments. So I believe the stablecoin would be one of the alternative, and then there would be several main stablecoins, and dollars definitely would be one of them dominating.
Very interesting. Thierry, how are we going to manage the sort of necessity of sort of tracking, accounting for sort of real world assets as collateral and liquidity? I mean, that's obviously one of the crucial requirements of both the Genius Act and MiCA and presumably whatever changes we see in the British regulations. But how is that actually going to be done?
So one of the challenges here is people start a business as a normal business. So they do their accounting, and that's great. But the accounting keeps track of their own funds. Now they're actually handling what is called third-party funds. They're actually handling funds and deposits that are not theirs, and that are in part to be tracked as a lien on their institution. And so it needs to be separated and segregated from their own funds. So that's a basic way of doing it. That means, from an accounting perspective, you have a sub-ledger, or you have two different ledgers to deal with. This is where Formance comes in, and basically we are very good at tracking a specific product ledger where your third-party funds can be booked correctly in there, taking into account the bitemporality of the banks being slower than what you're doing. So you're doing things real time and the banks are doing it once every banking day. And also, and this is also a very interesting one, because stablecoins themselves, we know the euro or the dollar, their lowest denomination is a cent, right? 1/100th of a dollar. With stablecoins, that's not defined. You can have a millionth of a cent in a stablecoin. So stablecoins could potentially enable business cases and use cases like microtransactions, having billions of transactions of less than a cent that eventually realize into a cent. But keeping track on that on a ledger or a database, well, you need to let your assumptions of a currency that can only be divided by 100. Nope, that's not the case anymore. Let's do Bitcoin, so it can be divided by 8 digits. No, that's not the case anymore. So you have stable coins that go up to 18 digits. Fine. But technically, it's relatively hard to implement that. And that's basically because most of these setups start with assumptions. And these assumptions, because stablecoins has challenged a lot of these assumptions. And with Formance, we're basically implementing a ledger from first principles, where you can apply all these different assets and different sorts. So on a day-to-day process, again, you need to track what's on your bank account. You need to track what you're offering to your end users. Now, I might use a little bit of specific things, but 20 years ago, the first time I heard about nostro vostro accounting, I was like, oh, now that seems logical. So whatever I have in the bank is split over my customers, which is a basic concept that you need to apply. We can easily apply this within Formance. So omnibus accounting, which is also something that's used a lot in crypto, where they basically have a big bag of all the assets of their customers, and that's the omnibus or a global omnibus. So the Formance ledger can help in keeping things separate in there. And as the Formance is real-time by definition, so we incorporate the real-time aspect, again, with the delayed asynchronous aspect of the banks or even the public blockchains, because it's not very real-time also. So that's how we can do that. Operationally, a very important aspect also, and those need to be booked specifically, is everything that happens needs to be booked. You cannot just ignore part of it. So that means you need to book all your transactions. You also need to have suspense accounts, manage those suspense accounts operationally. If suddenly some bank or financial institution charges me a fee, it takes it from money I don't own. So I need to cover that in my accounting correctly. So I need to be aware of that, and I need to follow that up. So operationally, there's a lot of ins and outs around that. Additionally, you might want to check if the fee is correct, but that's another discussion on how financial institutions calculate their fees.
There's a huge amount of complexity here, isn't there? Dia, I wanted to bring you back in because one of the other areas of complexity and one of the big use cases for stablecoins is sort of cross-border transactions. It's one of the beauties of stablecoins, and yet, of course, each stablecoin sort of sits legally in sort of one jurisdiction. How are the sort of cross-border operations going to work? And that's probably particularly pertinent to European businesses that are using euros and US dollars. So I guess if you're from Argentina and you're just focused on US dollars, it's maybe less of an issue. But how are people thinking about the sort of cross-border use of stablecoins?
Yeah, I think certainly that's where most of the conversations are. In some way, you can think of this as a faster FX transaction, right? So, for example, in parts of the world, in Southeast Asia in particular, governments are really pushing through with the issuance of local currency stablecoins. So if you're moving, if you're looking at a transaction that connects, let's say, the Eurozone with Hong Kong, then you can easily imagine a Euro stablecoin eventually moved into a Hong Kong dollar stablecoin. I think the interesting thing to debate here is, can you imagine the creation of new liquidity pairs, or will all that trade continue going through the US dollar? But you can connect a series of stablecoins backed by different currencies, depends on what the merchant in one jurisdiction wants, through where the liquidity sits to what the merchant on the other jurisdiction wants. So that's one way to connect kind of global regulatory frameworks. Another way to connect global regulatory frameworks is to actually keep it all in a single stablecoin and then look at how that stablecoin will be allowed in the jurisdiction where it's going. So in many places of the world, if you're using, let's take the UAE as an example. So if you are entering the UAE space with a dollar stablecoin, then the only thing you need to make sure is that that particular stablecoin you're using is on, for simplicity, let's say, the regulatory whitelist. So some stablecoins have kind of gone through the due diligence, right? So you can enter almost a different version of the dollar, and you'll be compliant. And then from then onwards, you think of, how are you going to distribute within the UAE? Do you need to move to the local? Do you need to move to the dirham, or do you stay in the US currency? Do you need to go off chain, or can you stay on chain? So there's definitely ways to align regulatory treatment without sacrificing the benefits of cross-border stablecoin transactions, which for the time being, it's predominantly speed, not necessarily cost.
Thank you. Unfortunately, we're running out of time now, so I'm just going to ask, I've got one last question for sort of all three of you. Let's start with you, Inna. What's going to define success for stablecoins? What do you want to see? Is it scale, stability, trust? What will define success for stablecoins, do you think?
First of all, I think regulations, because regulation will help low-risk merchants to gain more trust into stablecoins. Second is actually education of the market, because we do have early adopters, which is in high risk, and in order to other type of businesses to become more open to use stablecoin, not just stay and watch, they need to have more education. I think this is probably two main components at that moment, because I believe if we are gonna reconnect in 2 years, the recipes would be different absolutely. And we will see much bigger presence of stablecoins already across the globe, and particularly in Europe as well.
Regulation and education. Thierry, what do you think?
So I used to use a boutade that Bitcoin would be valid as soon as you can pay your taxes with it. And so this has been the case in a South American country, I think. Didn't follow that up a lot. But I think stablecoin itself, if you will be able to pay your taxes with stablecoin, that means adoption is there.
Nice. And Dea?
I'm going to go with commercial logic. I think that regulatory clarity will come. So it's more a question of timing rather than probability. And I think we're going to just default to good old commercial logic, right? So is it faster, cheaper, better?
Love it. It's been an absolute pleasure talking to all three of you today. I've learned tons. I hope many of our audience have too. Where can people find out a little bit more about you and the work that you do? Dea, where can people find out more about you and about Fireblocks?
I guess for me personally, I mostly use LinkedIn for social media, but we run quite a few blogs on the Fireblocks website that are policy related. So maybe I will try and drive some traffic to that part of the world.
Inna, where can people find out more about you and your work at Worldline?
It's the same. I mainly use LinkedIn, post some thought leadership observations and the notes from the event. And we have a Worldline page where you can read more about our partnership in stablecoin and Worldline payment orchestration and other posts.
Fantastic. And Thierry, where can people find out more about you and about Formance?
I'm gonna repeat the others. So I'm also on LinkedIn, obviously. I think it's the only social media I'm on, and we're doing the blogs, and we're present at events and industry events also. Yeah,
fantastic. And as for me, Benjamin, you can find me also on LinkedIn. And as a general note, X has definitely lost popularity among FinTech Insider guests over the last couple of years. And there you go. Thank you all so much for listening. If you like what you've heard, please do follow our podcast and do recommend it to friends or colleagues. If you want to join the conversation, seek us out on social media. Just search for 11FS or FinTech Insider, or you can email us at podcasts@11fs.com. So thank you so much again to my three guests. Thank you all for listening, and goodbye.
Hey, Ryan Reynolds here for Mint Mobile. You know, one of the perks about having 4 kids that you know about is actually getting a direct line to the big man up north. Mm-hmm. And this year, he wants you to know the best gift that you can give someone is the gift of Mint Mobile's unlimited wireless for $15 a month. Now, you don't even need to wrap it. Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.